Welcome back, folks. Taking a live trade case study here for you in the New York session. It's not the ideal time to be trading New York, okay? I mean, it's okay. Sometimes I will take a trade here at 9 a.m., but I like to trade 9:30 a.m. or 10 a.m. Second hour of New York, this is 9 a.m. That's okay. I'm looking at this trade because I like the setup, okay? What I don't like is this choppiness on the way up. I actually don't like that, and I don't like having these equal lows here. We did not take out Friday's low earlier today, okay? Now, what I do like about this trade is the fact that we have some bullish momentum, a bullish order flow on a high time frame 4-hourly chart. Okay, we have this down candle, which is our bullish order block on a 4-hourly chart, and we've traded above. So in my view, order flow is bullish. We have had this dump also on Friday. That's another reason why I do like to go long at this point in time. Not sure if we're going to take out these highs. Certainly very clean, but at least I can grab something maybe up to this rejection block on this 4-hourly chart, back up to maybe this bearish order block. Okay, so that's what I'm looking at. I haven't really worked out exactly where I'm going to take this trade off. I'll have a deeper analysis soon and work out where I want to take this off. It'll be in this rejection block or maybe this rejection block. Okay, I was going to see if there was a short setup today in New York, but given that order flow is bullish, and that's on this hourly chart as well, right? We have an hourly bullish order block, and we've got bullish order flow on the 15-minute chart as well. And I've already done a trade earlier today in London, which I have journaled. Okay, that's this trade here, quite easy to see on a 5-minute chart. We have our bullish order block, displacement above, back inside the bullish order block, and then displacement. Okay, I took a trade down closer to the low after taking liquidity on a 1-minute chart. This was a good trade, okay? It was a reasonable sized trade where I took partials into this fair value gap after going long, and then held some more for the equal highs. I've already got a video on this, so you can go and look at that video. So order flow is bullish, and therefore I'm looking for longs here at 9 a.m. This little blue box here, the 4-hourly bullish order block that I want to look at taking a long from. I'm going to scale in. I'm going to just put in a 5 lot. As soon as we hit that box, I'm going to buy. I'm going to scale in, okay? And then I may look to add some more depending on how price behaves, okay? So I just want to record the entry. I've still got to work out exactly where I want to take this off, okay? I'm not sure if I'll target the all-time highs. I mean, there's certainly liquidity there. I just don't feel, well, I'm not certain, I guess, if that's where we're going, okay? Won't be surprised if we do take that. I mean, on this 4-hourly bullish order block, we should see some good repricing higher, but I don't know if we're going to go as far as all the way to the top there, because of the lows we have right on this chart and also the lows we have on the weekly chart and daily chart down to 2470. Okay, so I'm scaled in. Okay, so I've taken a 5 lot long, so I'm long at this level, and I think it will go a little bit lower. I could have got a better entry, maybe even go lower, deeper, and 930 might have been a good long. I mean, there's also a risk that we keep going down, take out these lows, and 930 we turn around. So, but I'm getting in on this 4-hourly order block, right? That's why I'm getting in. So we've come into the high there of this 4-hourly bullish order block, okay? So it's anywhere between the high and the open, right? That's a reasonable entry. So there's not much, I mean, maybe down to the midpoint perhaps. Probably will get to the open. I'll put a little blue line there. But I'm okay into where I am. I've identified bullish order flow, so I'm comfortable. If I have to take a bit of drawdown, that's okay. I'm not too concerned. I mean, the size of that wick from its high to where we might come down is about 25 pips, so that's not too bad, okay? So I'm comfortable with the way that prices are moving. I just don't like this choppiness. Okay, I really don't like this choppiness. That's the only thing I don't like. And I'm just surprised we haven't taken out, we didn't take out Friday's low to reprice higher. So that's interesting we haven't done that. So that's the only reason I'm kind of just scaling in. I've already got a bit of a buffer in terms of some decent profit from my earlier trade in London. So I don't have to be too aggressive. Putting on a 5 lot and just leaving it as a 5 lot is okay. Let's think about exit. Okay. Haven't really thought about exit. I mean, I see these equal highs up here, and that's not too far. Let me turn off these lines. That's not too far from where we are. That's pretty easy. Okay, on a 4-hourly bullish order block, that's not a big move. Okay, if we measure from there to there, that's a bit over 300 pips. That's not a big move from this discount period being a 4-hourly bullish order block. Okay, we should get at least 100, 200 pips from a move that involves a 4-hourly bullish order block. Okay, because it is a high time frame bullish order block. Okay, now what's this done? And this is something I was looking at over the weekend that I didn't mention, is this move down is simply coming to this 4-hourly bullish order block, okay? But on this move up, we didn't make a new high, so that's why I didn't really mention it, because I didn't think it was going to be that significant. But we've now come back, we've now gone up and made a new 4-hourly bullish order block that we've now traded above, and so that is important, and I am expecting repricing higher. So let's think about a target on this trade. I think what makes sense is these rejection blocks, okay? I think we will get above this high, right? So I'm going to be targeting this rejection block up here and there's a midpoint there. Somebody asked about what about these yellow lines. They're typically midpoints of 4 hourly wicks or daily wicks or weekly wicks, okay, because a wick is simply a gap. And you'll see, especially 4 hourly wicks that haven't been traded into like this one, you'll see the market will trade into the midpoint of these wicks most of the time. So that's what those yellow lines are. Wherever you see a yellow line, it is typically a wick, okay? This one is not a wick. This one is this range, taking the high, taking the low, and identifying the midpoint of that range, okay? And that kind of just gives me a gauge of where's discount pricing, which is below that line. Might make that a different color. Let's make it purple or something like that. There we go. So that blue line there is the midpoint of this high and this low. Okay, that's important because that high's taken all this liquidity on the left, and this low here has taken all this liquidity on the left. Okay, so that's the current, what they call dealer's range. Okay, so if I want to go long, I want to go long below that level because that is discount pricing. Okay, that is the midpoint. That is the equilibrium level between that range, and so anything below there is discount pricing. The long that I took this morning was at significant discount. Okay, so that's what that is, and then anything above that is premium pricing. That's where, if I'm taking short, I want to take them above that level. If I'm exiting my position from a discount PDRA, taking a long position, I want to exit in that premium pricing. Okay, so I'm going to be looking at this rejection block and that midpoint. Okay, so that midpoint, let's just see where that's coming from. There you go. So that is a wick on a, I'm going to actually take this off. I don't need that blue box there anymore. So that's what that yellow line is. It is the midpoint of that wick. Okay, so I do believe we'll most likely come into there. And I guess one would, question, if we're going to come there, why would we not just take out these highs? And we may as well do that. So the other midpoint I'm going to document, so I have it on my chart, is this one here as well. That wick, and get the midpoint. I'll reset this back to yellow. So that's what those yellow lines are. They are typically a midpoint of a wick most of the time on a high time frame, like a 4 hourly chart or a daily chart or a weekly chart. Okay, so I'm definitely going to be taking partials there because that midpoint aligns with this bearish order block. Okay, so at the moment I've only got a 5 lot. So if we get up to that, what's that, 2514, then most likely I'll take my position off. Okay, that's well over 140 pips. But if I add more, then I may only take one lot of 5 and then another lot of 5 up here. I'm not at this stage looking to add any more onto this particular long, okay, because I don't like this choppiness that we've had on this move up, okay, and this Friday's low still intact, and these are pretty clean equal lows. And of course we have high time frame equal lows as well. So if we go back to a 4 hourly chart, we still have equal lows down here, right? These equal lows, okay, and that's tapping into that 2470 level, so they're going to be taken at some point. And then if we look at a daily chart, we have these equal lows as well. Again, they're the same 2470 equal lows that I've already mentioned. And then on the weekly chart, we have the same equal lows, and this 50 gap, and as I mentioned before, this weekly bullish order block. Okay, so I think this move up is just to rebalance some of these wicks. Let's put a midpoint on this weekly chart, okay, because that's going to be important. So I'm going to take this entire wick, and that comes in at 2516. Now, there's no guarantee you're going to get up there, okay, but that's a level that I look for. Now, if we go back to a 15-minute chart, we can see, now to try and work out, now was it an hourly chart? I think I was looking at, yes, hourly chart, I think, or maybe it's 4 hourly chart. Let's go back to a 4 hourly chart. Okay, so there's the midpoint of that 4 hourly wick, and this is the weekly midpoint. You can see that's in alignment with probably the midpoint of that bullish order block. So that level between that, we can draw a box and just be mindful to, let me just grab the coordinates here, 2513.99 is the low of that box. Okay, 99, and the high is 2516.36. Okay, 2516.36. So anywhere inside that range where I'm going to be looking at taking profit on this trade. Okay, between the midpoint of the weekly wick, which you can't see here, but there it is there. That's the weekly wick that I showed you on a weekly chart. That's the midpoint, and the midpoint of this 4 hourly wick. Those two align with this bearish order block. Okay, and this mitigation block. Okay, and just seeing if it aligns with this down candle. Let's just do it and see if we take this down candle, measure the midpoint of that. You can see, I'll make it a different color, how well that aligns. Let's make this, let's go with the blue color. There you go. So the midpoint of that down candle, that 4 hourly down candle, let me make this chart a bit bigger. The midpoint of that aligns with the midpoint of the weekly wick. Okay, so you can see there's a lot of confluence in that zone. Okay, bearish order block, mitigation block, midpoint of the 4 hourly wick, midpoint of the weekly wick, and midpoint of this down candle. Right, this big down candle. The big down candles are important. Okay, so that's why I want to take off my long somewhere in that zone. They could still go higher, right? It could still go up here into the midpoint of this 4 hourly wick. There will be, there needs to be trading inside of this wick. Doesn't mean it's going to happen now at some point in the future. right? So none of these are guaranteed levels, but when you have confluences, higher probability that we will get into some of that pricing, right into that zone. So that's what I'm looking for on this long, okay? On a 15-minute chart, it's moving along quite well, so that was a good entry, okay? Now, 930, which we haven't approached yet, right? 930 could still come back down into there, right? I wouldn't be surprised if 930 finds some resistance at this bearish order block, okay, and comes back down. And so 930 could well come into this bearish order block and slap me in the face and go down to take out Friday's low. That's very possible, okay? So for that reason, I won't be putting on any more than this 5 lot that I have. I'll be watching the 930 candle very closely. The thing that I have going for me, okay, and this is important, right? Because this is my thinking process, and this is how you should be thinking about your trades as well. Looking and thinking about both ends. You can't just be tunnel vision thinking you're going to be right. What I do like about this trade and why I entered this trade along was based on this 4 hourly bullish order block. That's it. Seeing that was the confidence builder to take this long, because higher time frame bullish order flow is going to trump lower time frame bearish order block, right? If I have a 4 hourly, which is a higher time frame than a 15-minute, saying to me order flow is bullish, then that's priority because higher time frame, right? That overrides anything on the lower time frame. So we should go through, any bearish signature on a lower time frame when we have a high time frame bullish signature. Okay. Now, what's important though is to note this current 4 hourly candle doesn't close for another 46 minutes, and that's after the 9:30 candle. So that'll close at 10 a.m. Okay, and I'm gonna have to make a decision and watch the 9:30 candle. Okay, because the 9:30 candle could react from this bearish order block. Okay, but as I said, the 4 hourly trumps that, so I'm expecting we go through there up into my zone here. Okay, so this is a good lesson, and I don't publish these before the trade's over because I don't want people to risk capital and jumping on trades that I'm doing. Okay, that's why I don't publish these live. Sometimes I will do a live trade case study ahead of time. That's very rare. Okay, typically I will do the trade recorded like I'm doing now, talk about the entry, talk about when I'm going to exit. Okay, but then post it after the completion of the trade, for the simple reason that I don't want others to jump on and follow along me as I'm trading. So if I posted this video now, most of the people would watch this video and jump in and risk capital, and that's not what I want. Okay, my channel is all about education. I want you to learn what I'm teaching you here. Okay, learn about how price behaves, learn about price action, okay, about the ICT signatures, and then go back and study the charts, okay, then monitor the charts live, do some paper trading for at least 12 months, okay, become comfortable, prove to yourself that you understand what I'm showing you here, okay. The whole purpose of me recording my entries and talking about my entries and my thinking process, and then showing you the journals in Twitter when I complete the trade, for you to go back and study. Why did I enter? What did I see? Okay, where did it enter? What time did it enter? Right? Because the more you do that, the more you'll learn. You've got to do that for a lengthy period of time, not just the back testing, but also forward testing, not risking capital, right? Doing it on paper, because that's going to excel your learning experience. Okay, so I'm going to stop this recording now, and I'm just going to journal this trade once I close it out. Okay, let me quickly talk about the this trade here that I did, which was the trade that I entered in London Open. Okay, it's also a useful lesson. Let's see. So on a 5-minute chart, now I entered prior to what I'm going to show you here. Okay, but if you look at a 5-minute chart, this time is what's important. Okay, I've mentioned it many times that 2:30 a.m. New York time is my preferred time to trade London. Okay, it's the second hour of London, and then at 30 minutes into that second hour, the time right there is 2:30 a.m. Okay, what have we done at the start of London Open 1 a.m.? We've dumped down. Okay, I've shown you this many times. Okay, you have to be studying the charts. If you're not getting this and you haven't studied enough, it's as simple as that. Okay, I've done example after example, live trades as well as just journal trades that I've done at this exact time, 2:30 a.m. New York, with this exact same setup with a dump prior to that 2:30. Okay, this is a very easy setup. Like, I don't think it gets any easier than that. Okay, at 2:30 we've taken liquidity. Right, at this point in time we're at the low of the current day. Okay, we're below Asia. Right, this is the lowest the price has traded on this day, Monday, the 9th of September 2024. We've had a dump in that first part of London. That's something that I look for. That is part of this setup. Okay, now you don't have to guess. Right, you don't have to get in as I did when this liquidity is taken, because I understand what's going on here. Right, I'm looking at a lower time frame when that liquidity has been taken. I'm looking here on a smaller time frame to see how is the market reacting at that time, right, in that 2:30 a.m. candle after taking this liquidity. Right, you don't have to do that. You can simply wait for this displacement on this 5-minute chart and this pullback. The pullback, think about what it's doing. It's coming into the bullish order block. Look at the consolidation. That's telling you that there is accumulation right there after displacement, right, after these two down candles have been formed, after liquidity has been taken at 2:30 a.m. So I don't think it gets any easier than that. Okay, now your target can simply be back up here into the fair value gap. That's exactly where I took off part of my position. Okay, that's a very decent move, right? Let's measure that move there from entry at this bullish order block up to that's 70 pips. right? You don't need much movement to be profitable, okay? Now, my target was a little bit higher. It was based on these equal highs on a 1 minute chart. You can see it right there, and that's where I exited. You can see it right there, okay? It's all on my Twitter profile. You can look at it, but that was a very, in my view, on this 5 minute chart, a very easy setup, right? Liquidity taken, 230, you got a bullish order block, gets validated, you can see displacement, clear displacement, pull back into that bullish order block with consolidation, and you get displacement. That's it, you're out. Right there, you're out into that 50 gap. You don't even need to hold. I held, that's okay, but I took off a large portion of my trade at that level, okay? It's all journaled here, right? It's that was the first portion I took off, we can see into that 50 gap right there, right? And then the second portion, I waited for those equal highs right there. Okay, so very, very straightforward. That's something you want to print out. You want to print this out. Okay, you want to note down the time. You want to do this on your chart. Don't print out my chart because there's no benefit to you. You've got to go and mark up your own chart, right? Mark up your own notes on there on your own chart, then print that out, okay, and use that for future study. That's how you want to learn, okay? So I'm going to stop the recording here, and then once I close this trade out, I will journal it, okay? And it's when I close the trade out that I'll publish the video for your learning. I hope that video is useful, and I want to talk with you in a future video.